as friends to support each other, go through the same pain points and work out that actually collectively we'll be stronger as we come through together. So I want to give a good sort of introduction to an amazing sort of journey of renewal, of sort of development and thinking through how to create transformation and change at scale. So I'm delighted to welcome to the stage, we have Louis Pastor, who's the Chief Corporate Development Officer and Chief Legal Counsel for Xerox, as well as Chris Tacey, who's a partner at Mac 49, the service. So please welcome to the stage, Chris and Louis. Great job.
Thank you, man.
You guys rock it.
All right, rapid fire. Greetings. It's great to see you all. It's been a long time. It's fantastic to have everyone back together again like this. And thank you, Jim, for the intro. It was fantastic. Louis, any comments before we start?
No, I'm excited to be here. I'm actually filling in for our CEO who was supposed to be here, but was very disappointed. He had an urgent thing he needed to deal with this week. So you're stuck with me, which I'll tell you should actually be more entertaining. I tend to go off script more, so let's get started.
Okay. I guess I'll start by asking a kind of greater context question. When you look back at your career, have you always been a supporter of corporate venture investing?
I wouldn't say I've always been a supporter. I was always very interested in it. So Jim had some great data up there, data that I actually wish I had when I pitched this idea to our board of directors, which I'll follow up with Chris Fisher about later. But I was always very interested in it, and anecdotally I had observed that it seemed to me like the companies I most admired or I considered the best managed, the best operated, the best at corporate development and M&A, they had this arm. Yeah. They had this muscle of their own. And so, I think that naturally made me very interested in it. And my first priority when I got to Xerox was actually to beef up our M&A function, which was sort of underdeveloped. And as we were doing that, it just became more and more clear that this was a different muscle, right? And you couldn't expect to have these capabilities and this level of understanding of kind of early stage businesses and what their opportunities were and what their growth paths were and how investors thought about them if you didn't actually have this muscle on your own. Yeah. So it became clear to me that this was something that we needed, and then it became about, well, how do I actually articulate that, right, for the board of directors of a value stock, right, with a very influential and opinionated activist with representation on the board, who's focused more than anything on free cash flow, right, and so that became kind of the challenge. At least in the in the near term, once it was clear that, to me at least, that this was a direction we needed to go.
That sounds like a challenge indeed.
Yeah, well, but you got to build up to it, right? So you got to start by convincing other people in management, right? And convincing our CEO that this is what made the most sense. And the other thing is, it wasn't even necessarily convincing him that this was something we needed or something we needed to do. It was almost more about timing. Like, how do I convince him that this is so important that it needs to be a priority now, right? Because it's very easy to say, okay, I get this, but we've got these 4 or 5 other initiatives going on. Like, I feel like we should prioritize those, and we'll come back to this in 6 months, a year, or something like that.
So what was the tipping point? What was the moment where you suddenly said, well, now is the time?
I think the tipping point was, every time we got the answer of, yeah, this is, we were never told no, right? It was always, yeah, this is interesting, I get it, let's figure out when we do it and, sort of how we convince people that this is the right thing to do and who we would partner with and actually how we would do it. And so every time we got the not now answer, we just went back and did more work to explain really the urgency and why this really needed to be a priority. And once we had beefed up our M&A capabilities and demonstrated our ability to evaluate, source, to execute, to integrate. That gave us a lot of additional credibility, not just with the CEO, but with the board. And so a lot of things sort of came together, at the right time.
So you mentioned earlier the kind of broader Xerox initiatives. Can you give us some examples of how corporate venture in general and Xerox Ventures in particular fits into the broader Xerox strategy?
Yeah, so there are 4 kind of main things we talk about with the street a lot. Like it's a slide in our earnings presentation every quarter. And it's driving revenue, optimizing our operations, monetizing innovation, and increasing capital returns. And the fund plays a role in all of those things, right? And so I'll sort of start from the most obvious and the last one, which is increasing capital returns, right? So being able to generate greater returns with the capital that we have, right? I mean, that's obvious, right? And so that's a big part of the reason, and I can talk a little bit more about this, why we're actually a financial first, investor. We're not a strategically motivated CVC. We're a financially motivated CVC, and that gets back to kind of like, what I was talking about earlier in terms of having that value bent and that value focus. But that doesn't mean strategic benefits aren't important to us. They're extremely important, right? It's just we're financial first, strategic second. And those strategic benefits, impact those other 3 initiatives that I'm talking about. So driving revenue, optimizing operations, and monetizing innovation. So we have incredible research facilities and incredibly talented scientists, based really primarily in 2 places, in Park, which is our research facility here in Palo Alto, and then in a facility we call XRCC, or the Xerox Research Center of Canada. And there's incredible work coming out of those facilities, but Xerox has had historically a very difficult time commercializing that, right? And so the CVC can help with that, and it can help to really bring in capabilities from the outside and be able to articulate, for the scientists who are there, for the people who are focused on incubation there, like, these are the things that you need to be doing. Also, here's who you would actually be competing against, right? And that's a really important thing because, otherwise these folks go and maybe they'll talk to some consultants, or maybe they'll talk to, other people they have relationships with, but we need to give them data, right? And say, no, this is, hey, if you want to focus on this technology, here are the incumbents, but also here are the people who are out raising money right now, who have raised money in the last year, right? And we may be able to even have looked at them before, right? And give something in more detail. And so, there's a lot of benefits to our innovation efforts. And then even on optimizing operations, this is such a rich ecosystem, this startup ecosystem. There's so much talent and so much interesting technology coming. And we're 120 years old, okay? And so we have systems that, they're not quite 120 years old, but we've got some pretty antiquated systems in some places, right? And so being able to bring in, for our operators, solutions that they've never seen before, that are maybe coming from earlier stage companies, because there's a tendency, especially at a company like Xerox, to say, okay, if I need a solution, a particular type of solution to a problem, I'm gonna start with the biggest and best names and sort of go down from there. But that's not always, in fact, it's oftentimes not the right way to approach it, right? But that's where people have relationships. That's where people, nobody ever gets fired for working with IBM, right? Maybe they should, but they don't. And so trying to de-risk that for people, so just bring in new solutions, but also say it's okay to work with them because A, look how well funded they are. B, look at we've done the diligence and we see the traction they have with their customers, right? Like we've actually interviewed their customers, right? And so the diligence process, whether or not we even make an investment, right, is illuminating.
Yeah.
Right? And then the final piece of that, the drive revenue piece, some of the companies that we've invested in, we're now reselling their solutions through our channel, right? We're, and what's amazing is even some of the companies we have not invested in, we're still doing that because you develop relationships with people. And the reason that we maybe didn't make an investment, it's not always because we passed. Sometimes there was no room for us in a round, right? I'm sure everybody in this room understands how competitive it can be to get on the cap table sometimes. And so, but we want to be a value-added player into this ecosystem broadly. So, anything we can do to help people that we've built relationships with, whether we're on the cap table or not, that's going to inure to our benefit, and it overall can help with our own our own sort of revenue stream.
Yeah. So you mentioned value add. I think everyone here knows that if you're a corporate investor, you live and die by your value add to your startups, and the value add is almost always provided by the mothership, not by Xerox Ventures. So in your mind, if you had to kind of enunciate what Xerox's value add to startups is, what would you say?
I would put it in a few different buckets, and it kind of depends what the startup actually does.
Yeah.
But one is we have this channel, right? So I touched on that, and that channel what's amazing about it is that it's feet on the street with SMBs, which is very difficult to replicate. It's one of the truly unique assets that we have at Xerox. But it's also relationships with 90% of the Fortune 500, right? I mean, those are existing customers of ours, right? So that's, being able to provide that sort of warm introduction that's incredibly valuable. There are other companies where I would say, the focus for them is actually still on development, right? And there are things we can do through our research facilities, XRCC and Park, to actually accelerate what they're doing. And that's something that's really difficult to replicate.
Yeah.
And that's one of the things. Even the channel, I would say, is, look, I think the SMB piece of it is unique, but I don't think it's, I think the enterprise relationships are something that probably a lot of the companies in this room could provide. The research is different. And then the other piece is just relationships. So even the people that aren't necessarily our customers, we have such great relationships with huge, SIs that we can make introductions to people for, because either we're customers or we have people who used to work there. Or, the relationships are just a huge piece of this.
So I'm going to ask an unusual question. Are there things that you've learned through this process that were unexpected and yet important?
Well, there's probably a lot of things that I've learned through this process that were unexpected, but the one that jumps out to me is, and I guess this could be somewhat controversial, but when we were building, the investment charter, right? And in that charter, we said we need to designate an investment committee, right? Like, this is just, CVC building 101, right? And the question is, okay, so how do you populate, your investment committee? And like so many things through this process, you have to look at who you have and what your priorities are, and are you strategic first or financial first? And there's a lot of different, depending on the answers to those questions, the outcome of how you're going to do something like build your investment committee, it's going to be different, right? So for us, we had built such support within the C-suite that, and because we were talking about a fairly sizable commitment, $250 million, we were like, well, look, if we have the buy-in and the commitment of the C-suite, and we're going to be putting big dollars to use, relatively speaking. We want to be writing a lot of checks, and we want them to be bigger in size. We might as well just keep, and the C-suite wanted to be involved. We said, we can, we'll embrace that, right? We'll have our CEO, we'll have our CFO, we'll have our COO, and we'll have our CTO, in addition to me and to our managing director. So we'll have a 6-person committee. And I guess the thing that I've learned that was unexpected is how difficult and unwise it is to actually have your CFO on your investment committee. and it is, and I say that, I say that with tremendous admiration and respect for our CFO. He wasn't always our CFO. He, and I've worked with him now in multiple different roles. He's incredibly strategic. He's incredibly operational. I always think of like CFOs of public companies as sort of having like, and this is an oversimplification, but like 3 kind of basic skill sets. Are you strategic? Are you operational? And like, can you build a relationship and a rapport with, the most important stakeholders, meaning investors, really, right? And both on the debt side and the equity side. And generally speaking, what I found is that CEOs, it depends on the CEO, but most CEOs value that third piece more than anything else, right? I don't want to have to get in front of investors. I don't want to have to get in front of shareholders and let the CFO answer their questions, because everybody's just trying to build a model. So like just answer their questions as much as you can so they can put the inputs in their model, and like I don't want to deal with it, right? But those other 2 things are extremely important. And we are very fortunate because we actually have a CFO who he does all 3. And that's why when we were building the investment committee, we were like, this is, I get it. Some people say don't have your CFO on the investment committee, but our CFO, he's different. He's different. He gets it, right? And then, we go through these investment committee meetings and he can't take his CFO hat off, And the reason I'm comfortable even like talking about this in a forum like this is because I had this conversation with him, and he's like, yeah, it's really difficult for me to take my CFO hat off because when when I come into one of these IC meetings, I'm coming out of a meeting where I reviewed, an IT project, right, that somebody wants to do that's of similar size, and I eviscerated them and, like cut the budget by 40% or 60%. And that's the only way to drive the ROI that we need to get to with certainty, right? He's like, and then I come in here and I have to like suspend belief, to understand like how these things are gonna, and you're telling me to value things at 30 times next year's ARR, and that's modest. It's just difficult to sort of like transition, right? And so look, it's not like we made a vote of the IC. It doesn't need to be unanimous. Right? So it's not like that's actually stood in the way of us making investments or executing. But I think in a lot of ways it's actually put him in an unfair position. And so one of the things we've been talking about is sort of reconstituting our IC to make it a little bit easier on him and frankly easier on us. Because the other thing is when we want to be active. We want to be putting money to use. I mean, we want to be disciplined about how we're doing it, and we want to be thoughtful about how we're doing it. But, this is another obligation for these folks, right? And so I think at first, at the outset, they all wanted to be on it. And I actually think as we've gone on, I think they find it, specifically for the CFO, I think they find it to just be, like I said, another obligation. And while it's great and he appreciates having line of sight into like the pace of deploying the capital, I don't feel like he thinks he has much value to add to it.
It's really hard. I mean, oops, my mic broke. I appear to have lost my mic. I will project. It's really hard if you think about a CFO. Your average CFO is working on an event horizon that's... I can't. Yep. I'm sorry. I will project really loud. If you think about your CFO, your average CFO is working on a time scale measured in months or quarters. Corporate venture, you're working on a time scale that's measured in, let's say, 5 to 10 years. Yeah. It's a big ask. Oh, thank you.
It's a big ask.
It feels kind of unfair, actually, to ask your CFO to do that.
Yeah, and I think he's found it frustrating.
I understand.
Yeah.
So if you think about...
And like I said, that was very unexpected because he checks all the boxes in terms of what you would want from a CFO who you were going to put on your investment committee.
I mean, intuitively, I think every single person in the world would say, of course you need your CFO on the investment committee. I mean, it's basically logic.
Right.
But it fails in practice. So you guys have done some extraordinary things very, very quickly. I mean, I'll be honest, it's really impressive to see how fast you've done this and how successful you've been. What do you attribute it to?
Well, it's definitely my leadership. No, it's not. I would attribute it to a few things. One is, we came in with the right mindset, right? So we sort of built up to this in the right way. I mean, we spent basically 6 months building a model portfolio and an investment charter, right? So we knew once we started actually bringing deals in and building the pipeline, we already knew what we were looking for. We had framed everything correctly, right? So you didn't have to explain, why am I looking at a CLM solution, right? Like that was clearly in a bucket we had already identified, right? And we had identified it in a way that it was clear what the strategic benefits were and the ways in which we could potentially work for them or work with them, right? And add value. And so I think that was incredibly helpful and helped us get moving quickly. So it's like you could say, well, you lost time because you lost 6 months, but the reality is, no, we gained so much more. And that also helped us identify who we needed to bring in. So the reality is, the reason why we've been able to do so well so fast is because we identified the right leader, and I don't mean me, I mean Chris Fisher, who's going to be up here later. And we identified the right leader. He built the program and sort of the portfolio and the charter the right way. And then once we did that, it became much more clear who we needed to bring in, what capabilities they needed to have, what we were missing, if you will, in terms of expertise. And then it also made more clear what we were looking for. And so, we don't have a huge team, but we have the right players. And that's just, to me, that's, for this game, that's actually the most important thing. And look, that's true of a lot of things, right? So when you talk about looking at startups to invest in, I mean, the team is, teams win, technology actually doesn't, right? I mean, so much of it is about, the people that you're investing with.
So on that topic, I think one of the challenges that many of us face right now is it's actually a very difficult hiring environment. So how have you managed to get this incredible team? Because the team is amazing. I mean, it's not just Chris. It's the whole team is amazing. How have you managed to get them to come and work at Xerox Ventures?
I mean, I think part of it is, we had to, it actually comes back to the investment charter, right? Because we could explain to them why they were such a good fit for us. And also because we had publicly made this commitment in terms of the size and the pace at which we were going to do this, right? I think people, when they're, evaluating opportunities, they want to know that there's, especially for something new, for a company that's very old, they want to know there's conviction and commitment, right? And I think that the investment charter, between the public announcement and the investment charter, which they could review, and we shared with them, and we said, look, this is the way we're going to invest, right? This is the pace, this is, by sector, by stage, by geography, by theme, how the allocations are going to work. I mean, everything. It was very thoughtful, it was very detailed, and if they took the time to go through it, I think so many of the questions they would have had actually got answered. And if they didn't take the time to go through it, then they weren't a good fit. So there is like a self-selection element of it. But also, look, this is an incredibly attractive area for people to work in, right? But so many of the people I think that come into this space, they don't already have the VC experience, And so generally, I think what you're looking for is people who have all of these capabilities, but maybe haven't done as much of the direct investing yet, or maybe they've only done some. And so understanding, how can I invest in them to grow them, to build that, right? Now, luckily, we actually brought in 2 people who did have some of that already, so we didn't have to. But as we're evaluating, look, we need to build a bench, right? Because I'm up here talking about how great these guys are, and next year, because of that, they're probably going to be gone. Don't go anywhere, guys. I'm going to take care of you. But so we have to build that bench, and when we think about sort of the next level below that and the pipeline we need to build, that's a key piece of it.
So I'm fascinated by the fact that you all are a financial investor first. I'll be honest. I mean, given my background, I love the fact that that's where you're focused. I think a lot of us would be interested in hearing some examples of how the actual investing has had an impact or influence on Xerox at a strategic level, if you have some examples.
Well, I mean, I guess let me start by actually explaining kind of why we're, a financial first,
Yeah.
right? So there's really two fundamental reasons for that. One is it really, I mean, just practically speaking, it was definitely the only way we were going to get this green lit. I mean, it was the only way we were going to get it approved. So we sort of knew that from the beginning, just given, we have a C-suite that's made up of generally like former private equity people and a board which comes from that world as well. But second, we felt like, look, in order to maximize like deal flow, to get into the best deals, we needed to be financial first. Because ultimately, if we were thinking about, well, how would we evaluate other people that are on the cap table, seeing other investors on the cap table who are strategic first and not financial first, to us is almost like a red flag. Like, I don't want to be investing with people whose interests aren't actually aligned with my own, which is to say, I want to see us maximize the value of this company so that we can generate the greatest returns, right? And so if you're sitting there looking at a cap table and a bunch of people on it are strategically oriented, your interests are not aligned, and they may not actually be looking for this thing to grow as fast as possible because maybe it's on their M&A roadmap, right? And that's, I don't want people who are just looking to buy this thing at a price that's lower than what we could otherwise get for it. So those sort of informed our decision making. But in terms of examples of the strategic benefits, I mean, companies we've invested in, we're already pulling them through our channel. Is my mic going on? Is it good? We have reseller agreements. We actually have a financial services business. We're doing financing for some of these companies. Like I said, some are not ones we've invested in yet. And we have R&D relationships with some of these companies, doing materials, doing analytics, AI, machine learning. There's a lot of capabilities we have that are unique, and that also allows, that informs where we end up going on our own research roadmap, right? So there's some revenue generation from it, but that's not meaningful. I mean, we do $7 billion of revenue a year, right? It's the point is more to inform where we should go with our own research and how we can play in the, bigger in the ecosystem.
So you guys have been amazing. You've exploded out of the gates. You're doing incredibly well. You've got a great team. So in your dreams, not your plan, but your dreams, like wild dreams, you can't sleep at night, you're having a crazy dream. Where is Xerox Ventures in 3 years?
I would say Xerox Ventures in 3 years, I would love to see, Xerox is no longer the sole LP, if you will. It's a multi-LP fund. We're the biggest investor. Maybe we're not the biggest investor anymore, but we retain this strategic relationship. And it's sort of a part of the mothership, but also raising capital from others and having more resources at its disposal to play even bigger, to generate greater returns, to get even better deal flow. I mean, we are not yet in a position where to date we have not led around, right? And so to me that's low-hanging fruit for the next 6 months, 12 months. But I want us to be bigger and stronger than that. I mean, I want us to be leading rounds. I want us to be taking whole rounds, right? And in order to do that, we're going to need more than a $250 million commitment. We're going to need 500 million plus, right? And so I'd like to, long term, I want to see Xerox Ventures as a multi-LP, multi-fund, behemoth.
That's awesome. I think that's something that a lot of us in this room kind of dream of. Do you think you're on track to pull it off?
Yeah, I mean, look, this is a journey, right? And so we've had to build this up from nothing, right? Like this little kernel of an idea, and it helped that we were able to point at some people who had success prior, and also point at, all of the obvious reasons why you needed to get into this, right? But if you had started there and then said to the board, and by the way, 5 years from now, 7 years from now, this is what we're going to have, the journey from X to Y, it's not linear, and so I don't think they'd be able to, they wouldn't be able to comprehend it necessarily. So you have to build up to it. And what we're doing now is just, putting wins on the board, demonstrating proof points, and that track record, is going to allow us to leverage relationships that we have to then ultimately go out and fundraise and do it the right way. So, I think we're well on our way there, because, like you said, we're already getting into some incredible deals, and we've really demonstrated already, I think, how well we can do in this and how much the mothership can help. And we're going to structure this in a way where the mothership can continue to help and also get the benefits, even while the fund has more independence. And so, now that we've already built this sort of framework, I think our ability to get from where we are to where we want to go, that is more linear.
Thank you so much. I think I really appreciate this. I think all of us appreciate this. And we're basically out of time. So thank you so much, Louis. And if you have any questions for Louis, come and find him after all of this.
I'll be around. Appreciate the time, everybody. This was a lot of fun for me, and look forward to meeting as many of you as possible.